Hello and welcome to the Perspecticast, the companion podcast to the Panda Perspective Substack. Coming to you live from Hong Kong. I'm just back from the SMM Metals Conference here. It was a wonderful day of learning new things and finding stuff out. I tried recording on the conference floor, but unfortunately it was a little bit too loud. So I have to do this again. So I wanted to start with noting that CATL has listed in Hong Kong today being the 20th of May. The fabulous 17% debut. So if you got any shares allocated to you, congratulations. I have not, so unfortunate for me, but nevertheless, quite happy with the overall idea, and going to be shifting into Hong Kong line out of the Shanghai line over the course of this week. In fact, most likely completed by tomorrow. I think it highlights just how strong a story CATL is. And as CATL goes more upmarket and more upstream, as it were, it will secure for itself a very prosperous future, not just in EV batteries, but the batteries for robots, batteries for storage, anything that's battery powered, right? And also with its chassis business, I think there will also be a much more meaningful part of the global auto business going forward. And it's guys like that, obviously, that are key for global metals demand. So great segue here to say that obviously this was what people were talking about, sort of the sidelines of the conference, because of course nobody could believe how strong an opening CATL has had. And it just highlights that the story behind these metals is actually very strong structurally, right? And I was beginning with copper. Clearly the best setup out there, right? I mean, mine supply is finding it hard to grow, right? Everyone was full of these charts that show that, look, the supply that's already approved is going to plateau, and we need 150 billion of extra spending on new capacity. But I find those conversations quite theoretical, right? I mean, we heard those in 2010 and 15 again. There's always been this idea that there's not enough of copper, and just slowly it grows into it. I always think it's a question of price, right? And incentive price might not be here right now, but it's not far off, right? I don't think we need to wait for $20,000 for per ton for copper to really start moving. Though, of course, Zijin Mining, they made a good point that to say that there aren't, if you're trying to buy an operating mine, it's actually not so easy because there's not enough of them for sale. And when one does come up, the competition is quite strong. MMG and China Moly, but also all the other guys, right? Your Rios. And so it's much easier to develop your own greenfield sites. And yeah, sure, it takes about 15 years plus if you are starting out in the West, but, in an interested place like a DRC or something, you can do it in a couple of years, 2 to 5, that sort of range. So solvable. All of it is solvable with money, but of course, that also means higher prices. Right now, it looks like the fair price is around 10,000, maybe just over 10,000, given the very immediate demand concerns. But with the US cathode imports picking up, all of it is setting up really rather nicely. In fact, I'm quite scared how nicely it's setting up. Am I getting too bullish? Is that a thing? But basically, that's the best story out there. Zinc, yeah, here and there, probably undersupplied 25, 26, but really, I don't know. It seems like there shouldn't be any structural issues with it. Tin, yeah, pretty good. Lovely. A lady from StoneX said that it's an optionality play with asymmetric upside, which I thought was a good way of putting it, but I suppose on Twitter it's known as tin to the moon, right? And excellent. Well, yeah, maybe. I think you can never quite... With smaller metals, it's always more challenging, right? You always assume that it's not going to matter because it's such a small part of industry X or process Y, and then somehow it does end up mattering, and then eventually price rises are never quite as high. But even if tin just goes back to recent highs, it'll be a good enough market for most producers. So quite interested in that. But of course, with Indonesian ban, it's not so straightforward to see how the pricing is going to play out, because the moment they remove it, obviously there's going to be some negative price pressures. But the overall, with the increase in electronics manufacturing, it does seem like we're probably in an environment where we're just not going to catch up on the supply side. In terms of nickel, yeah, I mean, that's oversupply continues. I was talking to a gentleman at the meeting, and we reminisced about how good the call on long nickel was in like 2018, 2019, and now we got to a 25,000 peak, which is perfectly reasonable at the time. It's just then technological change caught up with all of this, and then rock nickel just kind of went out of the window, and that's where we are. And it's clear that it's very hard for nickel miners to make money, and it's only the NPI guys that do. And interestingly, the NPI production does make money. It's the other sort of tolling operations that really take a bite out of converting the metal up the value chain and into a battery grade product. And I think the battery grade conversion now is almost, well, I mean, a theoretical process is loss making practically. Who knows, right? It's one of those things. But it does kind of put us in an interesting position whereby maybe there's going to be some life in the battery product, but then also the efficiency of the Indonesian supply chain is just such at this stage that it's very hard to argue with that. Cobalt, yeah, I mean, obviously the export ban is the thing that everybody's talking about. It's not clear to me that it's a be-all end-all and it resolves the oversupply, right? I think the more recycling increases, the more oversupply there is, and yeah, I mean, clearly, I think we're seeing an absolute limit on the prices. We're not going to hit, the crazy levels of a couple of years ago. I suppose maybe if things go really pear-shaped in the DRC, then yeah, arguably, but I mean that's not quite there yet. So it looks like we're not going that far. Then finally on lithium, right? I mean, I actually had this opinion that maybe we will see some supply contraction this year, and thus it's going to be supportive of the price. Does not seem like that's really happening. Inventories are still high and going higher. Markets clearly well supplied and no signs of change there. I mean, like, who's even making money here? Maybe some LATAM projects and obviously green bushes, but really, yikes, right? It seems to me somebody ought to start announcing closures, and ones like at the end of last year when CATL has announced that they're shutting down their lapidolite production in China, right? I mean, once the really high-cost guys start falling off and demand continues growing, then probably be okay, but I mean, it seems like it's a fair way away. Again, I think there is a rally in lithium, I believe, but it's obviously not coming in the near term. Let's see. Again, I still remain reasonably constructive in the sense that the growth in demand will continue, and when that's the case, at some point you do have the crossover, and at that point you get a squeeze, which would like to be in for, but obviously all these lithium names have been much harder holds than maybe one would have wanted. So overall, another great conference out here in Hong Kong. I'm really quite happy with the way everything is shaped up here. Very interesting. I hope this has been interesting to you. As usual, do please subscribe to Panda Perspective if you haven't already. We're gonna publish the Hong Kong Conglomerates Note tomorrow morning and take it from there. A really, really exciting publishing schedule, though I am struggling to see where I'm going to find the time to really get it all written up. But I'm sure I will figure something out. Anyway, on that bombshell, I hope you have a lovely week ahead, and speak to you later.